Hello everyone, it's me again. I'm Gary. Welcome back to my channel. Okay, so today's hot topic I'm gonna talk about is this guy that I met him, I think 20 years ago lah, on TV. First time I saw him is called the show My Apprentice. You are fired. Wow, this guy amazing. From then, TV talk show now become a US president, and now he can literally fire anything he wants. So recently he brought up the US trade tariff, and you can see from my slide, I purposely take this photo. I think he is very happy. They captured a very nice shot of him smiling, coming out with what he had told the guys his staff to do, and happily explaining the tariff one by one of different countries. Sounds a bit but yeah. Anyway, so yes, with this Mr. Trump coming out with this interesting tariff, and with some of my clients having this kind of noise in the market, naturally they will ask me questions like, Gary, so what do you think US trade tariff will affect the Singapore property price market, will affect the property outlook in Singapore? And if you notice, I also mentioned about one thing. We are all very concerned about rising home prices in Singapore, which is very watched by the government. So, food for thought, a different kind of thinking, can this US tariff curb rising home prices? Because you have seen in the last 5 years, our government have actually come out with a series of cooling measures to slow down the increase of housing price in the better hopes of allowing more people to have home ownership, because our key driver in Singapore is a home ownership, at least 90%, 95% home ownership. That is what the government always wants. Okay, so maybe it's an indirect cooling measure. Okay, so let's see how it can actually affect. Okay, so today we're going to talk about, I did a bit of digging back, because I always feel that policymakers, when they do policy making, right, leopard doesn't change his spots lah. Sometimes they will use back similar traits, similar strategies that they have used before. So I went back to dig a bit. And then I also want to talk about Singapore SG property prices amidst uncertainties, because this is not the first time in my experience of 9 years that we face uncertainty. Right on set when I started working, okay, there is cooling measures. When I come into this place, this industry full time, then that was also almost the onset 2019 to 2020 onset of COVID. Then after COVID, we have a very high interest rate. We have Russian war. We also have the Israel-Gaza dispute. So all these noises have always been around in the years of real estate in Singapore. Okay, then number 3 I like to explain is fundamental concepts of SG property landscape. Just some little points to always bear in mind and always remind us, is our property price resilient? Okay, and finally, of course, how can we take advantage of this situation? Where are the opportunities? Who are the ones that are worse off than the homeowners in Singapore? Okay, so let's look at number 1 first. Okay, US trade tariff. I went to do a bit of digging lah. Actually, it already happened in 2016-17 when he was first becoming the president. As we know, Trump is a very business person. He will use different sort of business tactics, scaremongering tactics, to actually get a better deal out. So the tension, the trade tension between US and China has already has happened in 2016-2017. Just that I think at that point of that term is not short-lived maybe, and this time round when he is almost immediately after being elected, he straight away implement this. Of course, it is also to protect his own nation lah, just to understand a bit from his point of view. But of course, there are some implications, because it means that trading will be a bit more costly, especially if they were to import certain things in, because they want to generate more production within US, right? Okay, and also to look back, yes, this has also been a topic since his first term as a president in 2016, 2017, all the way until 2019. Okay, so how does Singapore SG property prices amidst such uncertainty what we can see is actually during his term in the 2016 to 2018 period, ironically, you can see that the SG property prices actually went up, even though there is a tension between the US China kind of conflict. In my opinion, I always think that at that point of time, investors, especially, you can see how volatile the stock market is reacting to such a tariff announcement, right? Some investors like to change their asset to tangible assets, change to less volatile assets. Example like real estate, examples like bonds, and hence this probably is a juncture for some of the investors to right now come back into safe haven places to buy into the property. This is at the point in 2016 to 2018. Okay, right now we are actually being protected by this kind of sudden purchase from investors, because if you notice, we have a very strong ABSD to prevent these foreigners from coming in. And later in my summary, I'll talk about how this is actually a very good measure by the government to have such a strong protection point to prevent foreigners from flooding into Singapore's real estate. Okay, coming back, if you notice, when are the points whereby the property prices have a correction, have a bit of a dip, is number one in 2014 to 2015, because of the one cooling measure not enough. The government must come up with 6 cooling measures just to curb the property prices. Okay, so this is where the first point where the property prices actually had an adjustment. And the number 2 adjustment, right, is during COVID period, but a very minor adjustment of drop by 3%. As everybody always say, if you buy something during COVID period, boom, your property price actually went up quite a fair bit. Also, to highlight, if you notice, there is also a very stagnant point in 2023 to 2024, because in my opinion, this is a period whereby there's a high supply of TOP units coming from the 2018 launches that are delayed because of COVID. Example, Avenue South, a few thousand units. Normanton Park, 1,800 units. Treasures at Tampines, 2,000 units. Floral Residence, 1,400 units. All these units, when they come into the market, increase in supply, prices becomes stagnant because buyers got more choices. Okay, so this, if you notice what I have mentioned, most of the actions that will slow down or curb the property prices in Singapore seems to be coming from supply, seems to be coming from government's action, and not so much of uncertainties in the market. But why is this so? Can I just share with you also? If you look at the next slide, this is very important. We must understand the fundamentals of SG property owners. Then you understand why is important. Why this is a very strong point. Number one, this is from MAS. Point number 3, with home ownership rates in Singapore close to 90%, about 70% of the debt on the household sector balance sheet comprises of mortgage loans. These loans have an average loan to value ratio of less than 50%. That means their loans are very, very low. Okay, and the next thing, if you notice on point number 4, okay, is their overall debt servicing ability is also sound, with a median, that means the average total debt servicing ratio at 43% for new mortgage issued over the past years. So which means to say that Singapore, in short, household balance sheet is very, very strong, or very, very safe, which with a large portion in terms of cash, in terms of CPF that they have. How do I know this? Let me give you an example of a lead that I met, which is a very common household example. And after going through this, I also realized that, yeah, my work involved actually looking at quite a number of families' household balance sheet. And after looking at it, I look at my own one, I will say, wow, actually I was not bad lah. Okay, no, so but they really quite strong. The household balance sheet really quite strong. Say for example, let's take this example lah. At the bottom corner. Okay, so let's have Mr. L and Mrs. L as a family. Okay, they already fully paid their HDB in the west area already. Okay, so they also asked me they want to upgrade, and they are in the age group of 42 to 46. It's not the young couple that kind. Okay, so I was planning for them. If you notice, when we cash out their HDB, right, at around 750k thereabouts, okay, which is the transacted price there before, Mr. L will have 500k in his CPF. Mrs. L, maybe income not so strong, has about 180k in the CPF. They take back their cash equity of 400k from their house. This is almost $1 million, more than $1 million of household on their balance sheet, liquid and illiquid. Okay, and this is also not taking out any cash from their savings. I reckon their savings, because they have never upgraded their house, they stay in the 4-room for the past 15 years, pay off fully, right? I think their balance, they should have about 200k in their cash savings. So all in all, they have about $1.2 million. Okay, and the loan they qualify, sorry, it's not 150,000, is $1.5 million for 20 years. Okay, because their age is not very young anymore. Okay, so if we were to go into a private resale, straightforward 3-bedroom at $1.5 million, okay, their initial cash payment is 87.5k, which they have, okay, from their sales proceed. Their remaining 20% down payment is 409,000, which is quite a lot. Then again, if you look at, they can use their CPF OA to pay for it. They still have an excess of 271,000 in their OA, which means to say after buying this $1.75 million house, right, my client still has about 580,000 in terms of cash and CPF available. What does this mean? To me, very safe. To them, also very safe. After I sell my house, I still got this amount of money. I can choose to do two things. I can reduce my loan from 1.3 million to 1.1 million or 900,000. I can also keep it as a reserve in case they ask me, Gary, what if the economy change? What if I cannot pay my mortgage? My mortgage every month is about $5,000. Okay, then we keep this $500,000 just in case you need to top up or cover your mortgage. And if you just want to top up and cover, they can cover it for more than 100 months or around 100 months. So what I'm trying to say is that every client that I met so far in Singapore is actually very, very careful in the way they make their property choices, in the way they make their upgrade. And henceforth, why the government is very prudent and very daring to announce that our debt servicing ratio is at 43% and our loan to value ratio is all below 50%, which means to say, fundamentally, Singapore property homeowners can afford and can handle their home loan. And what does this mean for the property price or property index? I always also ask my clients, how does property price drop? Someone must sell lower. Is this owner going to sell lower if they can afford their loan? That's the key thing. If they don't sell lower, then how is the property price going to change down the road? That's my key question also. Okay, so fundamentals are very important when we look at Singapore SG property market. And of course, some of my clients like to ask me, like, then how can we take advantage of this information? We can, of course. Every resale owner, this is from my company. I think my company also makes very good concepts to understand also. Every resale owner only got one house, like per se, just now that lady that bought into a $1.75 million 3-bedroom. Okay, the family. They can't afford the loan. They only got one house. There's no reason for them to sell lower. But who is the one that has a lot of units? Starting with the word developer. Can I say that developers, when they take on a piece of land, they have at least a good amount, average 500 to 600 units that they need to sell over the past 4 years? If you are a developer today, when you see such a news, US tariff, stock market rate, 5%. Morgan Stanley also predict 5% drop in the property market. Interest rate doesn't seem to be reducing that fast. Is the economy going to be good? And especially when the government also announced recently that the economy going to have a bit of a slower growth. Okay, so as a developer, what would you think? Give discount lor. And it's very evident because developers, number one, they need to move the units, that's for sure. Number two, they also have a margin of buffer for sure because they are running a business. And number three, they don't mind giving discounts. So what I'm trying to say is that there is definitely opportunity in the market at such a point if you know where to look at and if you know where to find. If you do not know where to look at, where to find, feel free to call me, feel free to contact me. We can discuss and then we can see how we can leverage on this news to find out the best opportunity for you, for sure. Okay, so in hindsight, when I want to sum up, in summary, number one, trade tensions had happened before in 2016 to 2018 between US and China. It's a very common thing. It's like girlfriend, boyfriend quarreling maybe. Investors will seek a safe haven in tangible, less volatile assets like real estate during economic uncertainty, unlike putting the money in the stock market. Okay, and also interest rate adjustment due to economic pressures is likely to happen so that it can help to stimulate borrowing. Sorry, not borrowing, borrowing, and financing becomes more affordable. Number three, I feel that investment behavior may change from volatile stock market into more fixed income products like bonds or even into real estate to secure their asset value. Okay, so the key thing is just a little nugget for thought. Fortunately, our government has foresight. Last year, they implemented 60% ABSD on foreigner purchase, 65% on entities coming to buy residential properties in Singapore. Why do you think they actually do this? If they do not implement this, what do you think will be our property prices? Can I say that it's very easy for foreigners to pay previously 30% to just buy a property in Singapore and just to park their money here? After they are done, they leave and then they sell back same price and it becomes a problem again. So I think this is actually a very good strategy from our government last year to actually have this in place so that it deters a sudden shift of wealth into our real estate and hence causing our prices to again becomes very increasing too quickly. Okay, so finally, number 4, fundamentals of SG property homeowners is very important. Strong measures like TDSR, total debt servicing ratio, and loan to value ratio keeps our household balance sheet strong and remove over leveraging and speculative investors. This allows homeowners to tide through uncertainties, especially example COVID-19. We all went through, it went well, the property price went up again. Okay, so in hindsight, I would definitely not downplay the risk of US-China trade tensions. I think most important for what I always tell my clients is these are things that are happening in the market we can't control. What we can control is to have a bit more prudent financial planning and of course with the correct entry price. I think my homeowners still have a chance to upgrade safely as well as to elevate their asset. And this is how I come in totality when you ask me, Gary, how do you think of the US trade tariff? What is the implication? Just to reiterate, I always like to look at the fundamentals. Fundamentals in Singapore real estate is strong. We have been through this before. And I definitely can foresee that we will go through this together as well. But if you want to find out more on how to do it safely and with prudent planning, like how I plan for the other client with a lot of excess money left behind, right? Contact me and I will show you how I can do it. All right, this is the end of my discussion on this topic. I hope to see you in my next topic. Yeah, thank you. Bye-bye.